Welcome to the Hanse Analytics Daily Market Commentary. I'm Pablo Navarro. Today is Tuesday, March 6, 2012. Today we had a big down day on the markets. The S&P 500 futures saw a high of the day of 1349.5, a low of the day of 1338.5. We closed at 1341.5. Today's volume was 2.4 million contracts. That's above the 20-day moving average of 1.6 million contracts. For the Nasdaq futures, we saw a high of the day of 2594.75, a low of the day of 2575. We closed at 2589.75, and the volume for the Nasdaq was 285,000 contracts. That is above the 20-day moving average of 220,000 contracts. For the market internals, the New York Stock Advanced Decline Differential closed at negative 2,490. The Nasdaq Advanced Decline Differential closed at negative 1,556. We saw 4 new 52-week highs for the S&P 500 and 3 new 52-week lows for the S&P 500. As for the volatility, this is the VIX chart at 3-month chart. You could see that we broke the trend line that we had here acting as resistance, and we also went above the 50-day moving average, which is an important technical factor. We're going to start with the weekly chart. As you could see here, we continue to be on +1, +2 sigma channel for the weekly chart. Somewhat good. We hold +1 sigma on the weekly chart. Again, CI is red and momentum is dying here. Not good. Not a good sign. For the daily chart, we had a very big day today. We were down on 22 handles. As you could see here, we are now almost at -2 sig. We broke the 0 sig line that we talked about yesterday. Look here, the CI diff, it's very low right now. Volatility in the difference of the sigma channels, it's still compressed. This is because we need to see movement on side for the sigma channels to expand. On the intraday, most of like half of the movement was yesterday from Europe's open here. We started going down. We sold off a lot all overnight, and today's open we kept on making new lows. We made new lows all throughout the day basically, and the last 30 to an hour we came back a couple of handles, 2-3 handles from the lows, but nothing good here. As you could see, if you remember, here we have the 60-minute chart for the ES. We talked about this one yesterday. Now I'm looking at the 1334.35 level. As you can see here, this trend line that I just drew here, this is going to be an important level to hold. If not, we're probably going to feel this gap we saw on the last unemployment report a month ago. Very important number coming this Friday, so we'll have to keep a close eye on the numbers that are coming because they're going to be critical from now on. Now here we have the McClellan oscillator. As you can see, we're sitting at -256, which is oversold. This doesn't mean that the market's going to go up tomorrow or anything. It just means we are oversold right now, but we can go lower, as you've seen in the places here, or even here. We can continue to drip lower from here, but it's something to take into consideration right now. Okay, we're gonna talk about gold. This is the weekly chart for gold futures. We continue on the path to get to 1600, to the trend line we talked about yesterday. Today gold sold off 29 handles, 1.7%. Was a bad day for gold again. For the daily chart, there were some important moving average broken. We broke the 50-day moving average here, and we broke the 200-day moving average for the daily chart. Not positive again. So for gold, we'll continue to watch these moving averages and the trend line we've been looking at, and we'll see you tomorrow. Have a good night.